Welcome, viewers, to a thought-provoking exploration into the fascinating world of global finance. In today's video, we delve into a topic that has been generating considerable speculation and concern. Is this the end of the dollar? The US dollar has long been a symbol of economic stability and a cornerstone of international trade. However, recent events and shifting dynamics in the global economy have sparked conversations about the potential decline of the dollar's dominance. Join us as we embark on a journey to understand the historical context, current challenges, and emerging trends that are reshaping the landscape of global currencies. Historical significance of the dollar. The historical significance of the US dollar is deeply rooted in the post-World War II era, where the United States emerged as a major economic power. The Bretton Woods Agreement of 1944 solidified the dollar's role as the world's primary reserve currency, tying it to the gold standard. This arrangement provided a sense of stability and predictability to the international monetary system. Throughout the subsequent decades, the dollar's influence expanded exponentially. It became the preferred currency for global trade and investments, and central banks around the world held significant reserves in US dollars. The dollar's prominence was further solidified by the strength of the US economy and the widespread acceptance of the currency in international transactions. The historical journey of the dollar involves its role in shaping the architecture of the global financial system. The establishment of institutions like the International Monetary Fund, IMF, and the World Bank further emphasized the dollar's centrality in international finance. However, as we move into the present day, the historical significance of the dollar is encountering new challenges. The once unchallenged dominance is now facing scrutiny due to various economic, geopolitical, and technological factors. Understanding this historical context is crucial for grasping the potential implications of any shifts in the dollar's status as the world's primary reserve currency. The historical narrative sets the stage for a nuanced exploration of the current challenges and future possibilities discussed in the video. Current challenges to the dollar's dominance. In the contemporary landscape, the US dollar faces an array of challenges that cast shadows on its historical dominance as the world's primary reserve currency. One of the primary challenges is the mounting US national debt, which has reached unprecedented levels. This growing debt raises concerns about the long-term stability of the US economy and, consequently, the strength of the dollar. Trade imbalances also contribute to the challenges faced by the dollar. Persistent trade deficits and the reliance on imports have led to a substantial outflow of dollars, impacting the currency's value. As global economic dynamics evolve, the traditional patterns of trade are being reassessed, potentially altering the dollar's standing in the process. Moreover, doubts about the sustainability of the dollar-based global financial system have emerged. The 2008 financial crisis highlighted vulnerabilities in the system, leading to increased scrutiny of the dollar's role in global finance. Calls for diversification away from the dollar have gained traction, with some countries exploring alternative arrangements to reduce dependence on the US currency. Geopolitical tensions further complicate the outlook for the dollar. The shifting alliances and power dynamics on the global stage have prompted nations to reconsider their reliance on the dollar for international transactions. Sanctions and trade disputes have also influenced discussions about the need for alternative reserve currencies. Rise of digital currencies. The rise of digital currencies presents a transformative force in the global financial landscape, adding a layer of complexity to the traditional role of the US dollar. Cryptocurrencies like Bitcoin and the exploration of central bank digital currencies, CBDCs, by various nations challenge the conventional norms of currency and payment systems. Bitcoin, as a decentralized digital currency, operates outside the traditional banking system and provides an alternative to government-issued currencies. Its finite supply and cryptographic security have attracted attention as a potential store of value, akin to gold. Some proponents argue that Bitcoin and other cryptocurrencies could offer a decentralized and borderless alternative to the US dollar, reducing reliance on centralized financial institutions. On the other hand, central banks are exploring the creation of their own digital currencies, CBDCs represent a government-backed form of digital currency, aiming to combine the benefits of digital transactions with the stability of a national currency. China, for example, has been actively testing and implementing its digital yuan, with potential implications for the global monetary order. The growing interest in digital currencies raises questions about how these innovations might impact the traditional dominance of the US dollar, geopolitical shifts, and their impact on the dollar. Geopolitical shifts play a crucial role in influencing the fate of the US dollar as the world's primary reserve currency. The international geopolitical landscape has been undergoing significant changes, with the emergence of new economic powers and shifts in global alliances. The rise of emerging economies, particularly in Asia, has altered the traditional economic order. Countries like China have experienced rapid economic growth, challenging the economic dominance historically held by Western nations. As these nations become more influential players on the global stage, questions arise about whether their currencies, such as the Chinese yuan, could potentially rival the US dollar in international trade. Moreover, geopolitical tensions and the reevaluation of international relationships impact the dollar's standing. Trade disputes, sanctions, and diplomatic conflicts can influence perceptions of the US dollar as a stable and reliable reserve currency. Nations may seek to diversify their currency reserves as a strategic response to geopolitical uncertainties, potentially diminishing the dollar's prominence in global financial markets. The role of economic factors. The strength and stability of the US dollar are intricately tied to a myriad of economic factors that shape the overall health of the US economy. Key among these factors are inflation, interest rates, and the overall economic performance of the United States. Inflation, the rate at which the general level of prices for goods and services rises, has a direct impact on the purchasing power of a currency. If inflation is too high, it erodes the real value of money, potentially diminishing the appeal of the US dollar. Central banks, including the US Federal Reserve, carefully monitor and adjust monetary policies to maintain price stability and control inflation. Interest rates also play a pivotal role in influencing the value of the US dollar. Higher interest rates generally attract foreign investors seeking better returns on their investments denominated in US dollars. This increased demand for the currency can contribute to its appreciation. Conversely, lower interest rates may result in a depreciation of the dollar as investors seek higher yields elsewhere. The overall economic performance of the United States, including factors such as GDP growth, employment rates, and trade balances, contributes to global perceptions of the US dollar. A robust and resilient economy enhances confidence in the dollar as a stable reserve currency. Economic challenges, on the other hand, may lead to concerns about the currency's long-term viability. Central bank actions and policies. Central banks, especially the US Federal Reserve, play a pivotal role in shaping the value and perception of the US dollar. Their actions and monetary policies have far-reaching implications for global financial markets and the international standing of the dollar. The US Federal Reserve has the authority to influence the money supply, interest rates, and overall economic conditions through its monetary policy tools. Decisions on interest rates, quantitative easing, and open market operations directly impact the value of the US dollar. For instance, a decision to raise interest rates can attract foreign capital seeking higher yields, strengthening the dollar, while a policy of low interest rates may have the opposite effect. Quantitative easing, a monetary policy where central banks purchase financial assets to inject money into the economy, also affects the dollar. While it can stimulate economic growth, excessive quantitative easing may lead to concerns about inflation and the long-term stability of the currency. Potential scenarios for the future of the dollar. As the various forces discussed in earlier sections interact and evolve, they give rise to a range of potential scenarios for the future of the US dollar. Examining these scenarios allows us to better understand the dynamics that could shape the international monetary landscape. One possible scenario involves a gradual decline in the dollar's dominance. This could be driven by a combination of factors, such as ongoing economic challenges, geopolitical shifts, and the rise of alternative currencies. In this scenario, the dollar may still play a significant role, but its influence could diminish over time. Another scenario envisions a more abrupt shift, where a new global reserve currency emerges to replace or share the spotlight with the US dollar. This could be spurred by a major geopolitical event, a significant economic downturn in the United States, or a breakthrough in the adoption of alternative digital currencies. Conversely, the dollar might maintain its dominance despite the challenges it faces. If the U.S. successfully addresses economic concerns, implements effective policies, and adapts to changing global dynamics, the dollar could remain the primary reserve currency for the foreseeable future. Global implications of a dollar decline. A decline in the dominance of the US dollar would reverberate across the global economic and financial landscape, carrying profound implications for countries, businesses, and individuals worldwide. One significant implication would be the need for countries to reassess their foreign exchange reserves. Central banks around the world traditionally hold a substantial portion of their reserves in US dollars. A decline in the dollar's status could prompt diversification strategies, with central banks considering alternative currencies or assets to mitigate risks associated with over-reliance on a weakening currency. International trade patterns could also undergo significant shifts. The US dollar's role as the primary global trade currency has facilitated smoother cross-border transactions. A decline in its dominance might lead to increased complexity and potential disruptions in global trade flows. Countries and businesses would need to adapt to new currency dynamics and explore alternative payment mechanisms. Global financial markets would likely experience heightened volatility in the event of a significant decline in the dollar. Investors may reevaluate their portfolios, and asset prices could fluctuate as the market adjusts to a changing international monetary landscape. The interconnectedness of global financial systems means that developments related to the US dollar can have cascading effects on various asset classes and markets. Moreover, geopolitical tensions may intensify as nations jockey for position in a world where the US dollar plays a diminished role. Economic alliances and geopolitical strategies would be reshaped as countries seek to secure their interests in a changing financial order. The uncertain fate of the dollar. In conclusion, the fate of the US dollar remains uncertain amid a confluence of economic, geopolitical, and technological forces. The historical significance of the dollar as the world's primary reserve currency is undergoing scrutiny, prompting a revaluation of its role in the global financial system. The challenges facing the dollar, from a mounting national debt to shifts in global economic power, raise questions about its continued dominance. The rise of digital currencies and the exploration of alternative financial systems add layers of complexity to the evolving narrative. While potential scenarios range from a gradual decline to a more abrupt shift, the exact trajectory of the US dollar is difficult to predict. The interconnected nature of global economies and the multitude of factors at play underscore the complexities of anticipating the future of the world's reserve currency. As individuals and businesses navigate these uncertainties, strategies for diversification, monitoring geopolitical developments, and embracing emerging financial technologies become paramount. The global implications of a potential dollar decline underscore the need for adaptability and foresight in financial planning. In this landscape of uncertainty, staying informed, seeking professional advice, and remaining agile in financial strategies are essential. The evolving fate of the US dollar will continue to shape international trade, investment, and economic dynamics, making it imperative for stakeholders to remain vigilant and prepared for a range of possible outcomes.